Nick, last summer you wrote a public blog post about Rambus. And I think we need to revisit Rambus and give it its own brand new dedicated video.
Yeah, something about a memory chip shortage has us thinking a lot of people might be searching for Rambus right now.
Well, we have some details for you here on Rambus, and we're going to take some of these details from that blog post that we'll link here in the video description so you can check it out. And we've got some updated charts to help you analyze Rambus. But before we start talking about Rambus, maybe we can do a quick walk down memory lane and give you a little bit of info about us.
I'm Nick, this is Kasey. We started Chipstock Investor YouTube channel in September 2022. At that time, not many people were along with us for the ride. Not many wanted anything to do with semiconductors at all, maybe not even stocks at all during the bear market. And here we are. This really messy looking semiconductor industry flowchart made us, not quite famous, let's say. But
it wasn't my video editing, that's for sure.
This is what we do. We analyze businesses and their place in the electronics manufacturing supply chain and look for companies that can carve out and dominate a particular niche, or companies that can wield control over their supply chain and return excess profit to their shareholders as a result.
And here's a look at Rambus through the lens of our new research platform and where it fits in the supply chain. Rambus is historically an IP company, but they're also a bit of a fabless designer. You can get access to all of our research and keep up with some of the companies that we're covering over on Semi Insider at chipstockinvestor.com. But as I mentioned, Rambus is an IP and patent company. We'll do a quick review of what that means exactly. A patent is a governmental decree that gives the inventor the legal rights to defend against unsanctioned use of their invention or patent in a court of law. IP is a little bit different. That's intellectual property and includes patents as well as unpatented trade secrets, business processes, engineering designs, etc. This intellectual property is something that a company protects and keeps secret from their rivals to maintain a competitive edge. But Rambus is not just an IP company anymore. They're also a fabless chip designer, as we mentioned. They've started focusing a little bit more on memory interfaces.
Yeah, that's right. And this is why you would probably classify Rambus as a company that is potentially targeting a very specific niche and has emerged as a leader within that niche of the supply chain. So, Kasey already mentioned the IP that they control, also designing some of their own chips. And in their annual report, they give a bit of an overview of who they compete with in the memory interface chip market. So these would be products that they actually design and sell themselves. Some competitors include Monolithic Power Systems, Montage, Renesas, and Texas Instruments. And then on specifically the IP side, besides in-house development from some of their very own customers, that would be some of the memory IDMs like Micron, for example, or SanDisk. They also compete with some of the bigger third-party IP providers like Cadence and Synopsys, the companies that also do EDA software.
This is where things get interesting, especially now with the memory market shortage. These are some of the chips for memory that Rambus provides now. On the right in green are the IP logic blocks. That's the segments that are incorporated into a GPU or other logic chip that control the interface with the surrounding memory and network parts of the system. These are the parts that Rambus still sells via licensing and royalty agreements with customers, which falls into their older IP business model.
And some of those customers are really familiar names, companies like NVIDIA, AMD, Broadcom, and more. So really big customers. And still a pretty sizable market, at least for the IP industry that Rambus addresses here. But as you move through the supply chain, the more work that's done, the more value that's added to a technology, the more revenue can be charged. What that means is IP ends up being a pretty small revenue opportunity. And so this brings us to the reason why Rambus has branched out more into actual chip design themselves. They can use their very own IP to design their own chips and actually earn more revenue as a result. So that is the left-hand side of these solutions that Rambus talks about in this slide.
And then let's take a look at the actual memory chip interfaces that Rambus designs and sells.
This is a type of DRAM product. In display on this particular slide is LPDDR5 memory modules, but a lot of this IP and also these memory interfaces that Rambus provides are also good for the really exciting DRAM product, HBM, high bandwidth memory. Those are the little cubes of DRAM chips that are co-packaged alongside a GPU or some other custom AI chip for the data center, packaged really close together to help solve some bandwidth and performance issues. These are some of the exciting things happening at Rambus that has investors feeling very optimistic about the business. Kasey, you mentioned that the actual chip design itself is the newer business, but let's take a look at the revenue segments broken up. And you can see here from this chart from our friends over at fiscal.ai that they're in blue. The sale of their own in-house designed chips are actually nearly on par now with the traditional business, the licensing and royalties segment. They're in orange.
In this most recent quarter, the September 2025 quarter, product revenue came in at $93 million, and then royalties in orange, $65 million. And tell us about that red line, Nick. What are the licensing billings? Came in at $66 million.
You can almost think of it like the subscription model. This is the fee that companies like Rambus charge its customers. Something similar happening also at ARM Holdings. So that's the fee that is charged customers to access the library of IP and patents that they use in their own designs. When licensing subscription is realized, that actually is included in the orange bar, as well as royalties. That is when an actual chip that features a Rambus IP block is actually manufactured. Both the licensing and the royalty payment gets logged in orange. But the interesting takeaway here that you should focus on is, as of at least this latest quarter, Rambus is actually more of a fabless chip designer these days than it is just a pure licensing and royalties IP business.
This is a shift, of course, in the business model for Rambus, which we actually like. We think it makes a lot of sense, taking a measured approach to the IP portion of the business, but selling not only designs, but also products to the key customers like the memory chip IDMs.
And a lot of interesting things are happening right now because of this memory chip shortage. Over on our research platform, we have a number of articles and some discussions with our members on shifts that are taking place because these memory IDMs are having to make difficult decisions with their own manufacturing capacity and engineering capabilities right now. Whenever there's a shortage, basically that means you're constrained. You don't have enough resources at your disposal. And so you might choose to outsource more stuff to a trusted partner, perhaps Rambus. So with that in mind here, and as you maybe are waiting for a Q4 update from Rambus and outlook on 2026, let's look at where we are currently on the valuation. Let's start with operating profit margin, the actual trend on the operating profit margin.
Rambus's operating margin trend is obviously going up based on this line. In the last few years, mid 30% range. In the last 12 months, 36.4%. Management continues to believe that it can reinvest these profits to drive more high-end, differentiated product and IP over time. And HBM4 is one example of upcoming products supporting more next-gen AI data center development. And we'll highlight on this chart the increasing revenue based on those products here in the most recent quarter, $178.5 million.
And if you look further down that chart, you can see that resulting cash from operations is a bit lumpy. That is not out of the norm for a company like this. If you want more growth later on in the future, you do have to reinvest some of your cash right now to tee that potential growth up. So that's where we're at right at the moment. Rambus reinvesting to keep its place in the data center on the rise. However, as you saw in the previous slide, nearly 180 million in revenue in Q3 2025. Their outlook for Q4 actually pushing awfully close to 200 million in quarterly sales, all the while keeping total operating costs roughly flat, roughly in check with where they were in Q3. So again, the resulting cash from operations for Rambus is going to be lumpy as they develop more IP, design new chips, but the trend definitely is still positive. And again, because of that memory shortage, there is a possibility here that Rambus's growth does continue alongside its partners, especially the IDMs, the memory chip manufacturers. This is one reason why we updated this end market chart last year. Accelerated computing and AI infrastructure growth is re-accelerating. It's starting to trickle down into the memory part of the market. Rambus actually not just exclusively a data center business though. They're a bit more diversified than that. They do have customers elsewhere in the semiconductor end market as well, consumer, cloud and enterprise. So that would be things outside of AI data centers specifically, and of course, auto and industrial. So as those markets also heat back up again and maybe join in on the AI data center party, Rambus can benefit there as well.
Before we wrap this conversation up about Rambus, let's take a look at their valuation. Both these metrics on a forward-looking basis in blue, price to earnings sitting around 38x, and in orange, price to free cash flow, nearly 41x. So what do you think about Rambus? Is it still reasonable?
Yeah, that valuation definitely has ratcheted up a bit in recent months from when we discussed it about 6 months ago, definitely ratcheted up from when we discussed it a year ago. But also, the expectations for the memory market are quite high for 2026. So it's possible that Rambus actually starts generating a really healthy amount of cash, perhaps a lot more cash than the market is currently expecting. If you are one of those investors looking for ways to play the memory chip shortage, this is one you might want to do some more digging on, or just simply add it to a basket of memory chip stocks. Word of caution though, a lot of investors out there calling the memory market no longer a cyclical industry. It's no longer a commodity. For the uninitiated, there are periods of cyclical growth where the semiconductor industry might fool you into thinking that that is the case, but these cycles always eventually come to an end. And it's probably too soon to call an end, obviously, to the memory supercycle happening at the moment, but you should be on the lookout for that. We're on the lookout for that. You should join us over on Semi Insider where we talk about those things all the time.
You can get access to Semi Insider and our research platform only at chipstockinvestor.com. Make sure you come over there and check it out, and we will see you again very soon at Chipstock Investor.